becoming a master at losing. Don't be afraid of failure, embrace it, because on the other side of the failure, it's a whole new version of yourself, which you can be proud of. Stop trying to be a hero, start trying to be consistent. Profits are not given, they are rented from the market, and the rent is dual every day in the form of discipline.
How do we become better losers?
If you perceive losses as a bad thing, you're going to do everything you can to avoid losses. How I define success in trading: when you are able to trade without worrying about the trade outcome. You treat losses as your best friend.
One of the biggest mistakes I find a lot of traders make, they fall into this trap of confusing luck and skill. Has this been something that's ever happened to you before?
I always say that practice does not make perfect, practice makes permanent.
100%. How do you take your focus off the money and focus more on performance?
If you are able to reduce the frequency of mistakes, you will automatically make more money.
I've often heard you say that failure is your friend in trading. What does that actually mean in terms of day-to-day context?
I think failure is important if you want to succeed at trading, and how you define failure will affect the trajectory of your trading journey. If you're someone who actually embraces failure, someone who is okay with losing, then you are probably going to have a lot of fun in this game. Like, you are just going to last long in this game. To me, I always have this concept of becoming a master at losing. The reason being, the more you lose, the more feedback you will have over your own trades by analyzing the losses and extracting the wisdom from these losses, extracting the lessons from these losses. And that's the only way that you can improve. The only way you can win is to learn how to lose fast. And the fastest way to blow up your account is to try to win more, to make more money. So by taking the time out and actually reflect over your losses, over your failures, you will be able to improve and continuously refine your trade plan. So don't be afraid of failure, embrace it, because on the other side of the failure, it's a whole new version of yourself, which you're going to be proud of, and you will develop your edge faster by having as much failure as possible, by having this like feedback loop.
I completely agree with that. And I find it's difficult for a lot of people to accept it though, because of usually the schooling system. School teaches you that if you want to be successful, you have to be right, you have to be correct. And so it often tells you to kind of move away from failure. So in the context again of going back to trading, how do we become better losers? Like, how do we take that feedback and actually start to apply it in a productive way rather than just having our confidence shattered and thinking that we can't do it because we're not seeing success?
I think the first thing is to change the way you perceive losses. If you perceive losses as a bad thing, you're going to do everything you can to avoid losses. And ironically, when you try to avoid losses, you end up taking even more losses. So it's about reframing losses as lessons. If you can go into trading with that mindset, like I said earlier, you will be able to play the long game. You will be able to treat trading more of like a marathon rather than like a sprint. So the first thing is reframing. The next thing is when you encounter losses, you want to make sure that you are writing down and you are journaling it. And most importantly, you want to make sure that you are reviewing it. How I define success in trading is when you are able to trade without worrying about the trade outcome. When you're able to execute your trades without reservation, hesitation, or fear. And you simply just be, you accept the market for what it is. You don't try to impose your thoughts, your bias onto the market, and just accept it for what it is. And the only way you can get to that stage is if you relentlessly review your trading data, your losses, your mistakes, so that you can actually find out what are your weaknesses, what are your strengths, what are things that you are good at, what are things that you're not so good at, and just continuously strive to improve these things. Yeah, so just by having like that closed feedback loop, it allows you to become profitable much more faster. And the only way you can do that is by, like I said, ensuring that you treat losses as your best friend.
I think that was something I always lacked in my early days because I honestly never kept a journal. And without the journal, there is no feedback loop. There's nothing to learn from. You only rely on your memory, and your memory is always going to be skewed of what happened in the past. So completely agree, completely resonate. And I think definitely something that people should need to be taken away from that. One of the biggest mistakes I find a lot of traders make is they fall into this trap of confusing luck and skill. Has this been something that's ever happened to you before?
I define luck as preparation meeting opportunity. A lot of times when I win like high R multiple trades, the only reason why I won those trades is because I've done my preparation, my research, and my analysis. And I seize the opportunity when it arises. So I believe that trading is a skill that can be developed, can be nurtured, and it's not something that is heavily dependent on luck. Obviously, there is a factor of luck, like there is a small part of luck that plays into it, but ultimately it's about whether you're in the right place at the right time to capitalize on the luck. And the only way you can get to that point is, like I said, just prepare your mind, prepare your body, expect the worst so that when the worst actually happens, you're not surprised whatsoever.
I think the biggest mistake that a lot of traders make with this, though, is they put all their focus on the outcome of the trade. And when your only measure of performance is P&L, it's easy to do all the wrong things and be rewarded from it. And that just creates that negative feedback of like building this bad habit that's really, really hard to break. Is that a trap that you felt like you ever fell into?
I always say that practice does not make perfect, practice makes permanent.
100%.
If you are cementing bad habits, you are continue doing self-destructive behavior unconsciously, then you are just going to get better at losing money because you are doing the same thing over and over again and expecting different results. So the key to prevent this from happening is to have that conscious awareness, is to make a conscious decision to be aware of the emotions when they arise, be aware of yourself when you're about to embark on like a behavior that is not in alignment with your goals, and then stop yourself from going down into that path. And the only way you can develop that conscious awareness is by like what we have went through the use of meditation and really developing the skill of being mindful in the present moment.
So if you agree that as an aspiring consistently profitable trader, you have to track more than just P&L, how do you actually go about doing that? How do you take your focus off the money and focus more on performance?
I think profit and loss is a lagging indicator. A leading indicator would be how you actually show up to the charts, how you think when you are trading, and how many times do you actually follow your trade plan throughout the day. If you are able to consistently execute your trade plan to the best of your ability every single day, eventually you will let the odds play out and eventually you will succeed. If you are able to reduce the frequency of mistakes, you will automatically make more money. Like how I see trading is that it's not like a linear journey, it's like an exponential journey. And the only way you can get to that point of exponential compound growth is when you first go through the suck. This is what I call the suck phase. The suck phase is where you are losing money, you're blowing accounts after accounts. And this is the time where you're just making mistakes over and over again, right? During this phase, you want to get this phase done as much as possible, like as fast as possible. And the only way you can get through that phase is by really reviewing the data that you have gathered, reviewing the trades that you have taken, and thinking about how you can change your behavior, right? How you can stop making these same mistakes again in the future. So if you're able to make less mistakes, or rather catch yourself when you're about to make a mistake, then to me, that's a leading indicator that you're getting better at trading.
Yeah, I like the idea of being able to catch yourself in the mistake, because I always hold this philosophy that we are human beings and therefore we are naturally imperfect. And so the idea of getting to a stage where you're ever going to be perfect in what you do, especially in a probabilistic environment, it's impossible. So developing that ability with the level of awareness, the feedback loops like we've talked about, I think is really important if you ever want to be able to break free of the cycle of losing money 100%. And to be able to do something different.
No.
Quick fire question for you. True or false? Do you think intensity is greater than consistency?
No. I'm a big believer about consistency. I believe that if you can just get 1% better every single day, eventually you will get to the point of exponential growth where you will see the most amount of money that you will ever make in your entire life in like one trade. And the only way you can get to that point is by focusing on the process, by ensuring that you're sharpening the sword every single day, ensuring that you're continuously improving and refining your trade plan and optimizing your trading performance. And a simple way to be consistent is by doing the same thing for 21 days straight so that it becomes a habit. I'm not sure whether this is like a real thing or not, but I heard somewhere about this. And there's this exercise which I call the 21 trades exercise. The 21 trades exercise basically states that you want to execute 21 trades that check off every single criteria in your trade plan for the next 21 days. The goal of this exercise is not to make money. The goal of this exercise is to ensure that you get used to the feeling of executing your trade while following your trade plan. And the goal of this exercise is so that you can get to that point of, or rather, how I define this exercise as completed when you have gotten to the point where you fully accept that anything can happen in the market. You don't know what's going to happen next in order to make money in the market. And you know that every single win and loss is random. Yeah, so you want to get to that point. And if you can't get to that point after the first set of doing this exercise, do it over and over again, right? So do it for 21 days straight. And then if you can't get to that point of equanimity, get to that point of mental equilibrium, do it over again until you eventually get to that point where you are fully detached from the trade outcome. That is what I call the 21 trades exercise. And I think every single trader should do it.
I've heard you say before that it's not just what strategy you trade, but how you think about that strategy. What do you mean by that?
I would say that success in trading is not defined by your strategy, but is defined by how often you follow your strategy. If you have like a proven strategy and you follow it consistently, there is no way you will not succeed. But if you don't have a proven strategy, or you don't even have like a trading plan in the first place, then you cannot be surprised when your trading is in chaos, when your account is red, when you are incurring losses after losses. So it's about how often you actually follow your strategy, because that will have a big part in terms of how many winning trades you will be able to get. And you need to develop the trust, not just in yourself, but in your strategy. Because when you don't trust your strategy, you will not let the trade play out, and you'll always be taking small profits and incurring large losses. And the only way you can develop trust in your strategy is by gathering so much data where you develop this undeniable conviction over your strategy. And the only way you can start trusting yourself more is by keeping the promises that you make to yourself. It's by ensuring that you are doing the things that you tell yourself that you are going to do. It's by acting in a way which is going to allow you to achieve what you want every single day, regardless of how you feel. So that's how I would frame the proper thinking of your strategy, is by having trust in yourself, your strategy, and ensuring that you follow your strategy to a T. If you just do those three things, you'll be set for life.
When it comes to work that happens off the charts, what do you think has the greatest impact on your ability to succeed?
Reviewing my losses. If you want to become profitable fast, you want to gather as much data as possible, as fast as possible. Think about it. A trader who can take 100 trades in the span of 30 days is going to have more data than the trader who takes, let's say, 5 trades in the span of 30 days. Which means that that trader will have a competitive advantage over the other trader who trade less frequently. And the only reason is because he understands the law of large numbers. When you are taking 100 trades, what happens next is that you are able to find out what are the strengths and what are the weaknesses of your trade plan and yourself. And then by doing that, you are able to develop strategies and solutions to combat with your weakness and continue to reinforce the positive behavior that led you to winning those trades in the first place. So data is key here, right? So if you want to become successful at trading, you want to make sure that you gather data as fast as possible, right? The speed of gathering data is a key trait that I think professional traders have that retail traders don't have. And that ties into what I mentioned earlier about reframing losses and treating it as data points rather than a bad thing, rather than a thing which proves that your edge is no longer working.
Yeah, I like that. If a new trader was watching this and they wanted to gather the data that you're saying is the most important thing, how much do they need to gather before they can determine or draw any meaningful conclusions from it?
If your strategy cannot survive 100 trades, you will not survive in a year. So I'll say a good rule of thumb is to ask yourself, what's the number which you have to backtest that it will be unbelievable that you do not develop confidence after backtesting that number of trades. And someone who's watching this, you probably start thinking about a number. The number could be 100, the number could be 1,000. Once you have an idea of that number, the next step is to do the work and go and backtest that amount of trades. Because when you start backtesting that amount of trades, you're not just gathering data, but you're also getting more competent at trading. You're also getting more used to trading the market, and you are able to improve faster as well.
Yeah. I really think data is the foundation for everything. For what we're talking about here, it gives you the blueprint to finding your strategic edge. But also in the process of doing that, it builds your psychological edge. It gives you the confidence. It gives you the trust. It gives you the ability to keep doing the thing that you're supposed to do, even when it doesn't work. And that's usually the point that trips up most traders, because they don't really accept that this is always a game of probability at the end of the day.
Yeah.
When we're speaking about new traders specifically, I have seen over the last few years that the barrier to entry to get into trading has basically never been lower. If you had to give advice to someone that's coming into trading, not knowing anything before, and you wanted to try and get them profitable in the space of 12 months, what would you do? What advice would you give them? What sort of blueprint would you take them down to try and get them to that goal?
Of a 3-step process, the first step is to reframe your mind, is to shift your paradigm. Because your belief dictate your actions, and your actions dictate your results. So if you believe that trading is difficult, it's going to be difficult. If you believe that trading is a scam, you're going to give up after 5 losses in a row. So it's all about reshaping your belief and ensuring that you have the right belief system to succeed in this market. Because a lot of the things that profitable traders do are psychologically uncomfortable, and it requires you to overcome that resistance, that inner voice in your head every single day. The second thing is to develop your technical edge. And my best advice to a beginner trader would be to stick to one strategy, one trading style. But at first, experiment with everything so that you can really figure out your own edge, right? And you need like a proper trading plan in terms of when to get in, when to get out, how much to risk per trade, where should you place a stop loss if the trade does not go in your way, where should you exit when the trade do go in your way, and what are you going to be doing when you are in the trade? What is your trade management method? Whether that's scaling in, partial profits, trading stop loss, set and forget, so on and so forth. So develop your technical edge and find out what works for you. Because what works for you might not work for me. And the last step would probably be treating it as like a lifelong journey of learning about yourself, the market, and your edge. And it also ties into psychology again, right? Because after you develop a strategy, the hard part is not executing the strategy, it's mastering yourself. It's to ensure that you don't self-sabotage and give back the profits that you have made back into the market. It's to ensure that you don't start revenge trading after a string of losses, and you don't overtrade because you start getting euphoric and you think that you're the best trader in the world. So that is the lifelong battle. Like, I'm still battling that to this day. But what I've found is that I'm more aware of these mistakes when they arise right now. I still make these mistakes. I still have these emotions, but I'm more mindful of them. And I catch myself before I actually commit the mistake and take the bad trade. So if you embark on this 3-step process, you will become profitable in, I wouldn't give it like a timeline, maybe 6 months, 12 months, 1 year, 3 years, 5 years. But you will get there as long as you follow this 3-step process to a T.
I like that. The foundation for me, like listening to you, hear you say all of that, it comes down to a lot of clarity. And it's not just clarity in the charts, but like clarity in knowing yourself. There was a beautiful quote that I heard many years ago, and it was this idea that most traders think they're failing because they don't know enough about the markets, but in reality, they're failing because they don't know enough about themselves. And they don't understand why they react to fear or greed or wanting to take revenge in certain ways. And those are often the pitfalls that a lot of new traders fall down. So I completely resonate with what you say. I see it in many new traders starting out. And I think, something that you said at the beginning is you have to completely rewire. And I think you called it like a paradigm shift, right?
Yeah.
You have to start by doing that, because the reality that at least I found, and I've seen many others going through as well, is that most human beings are not wired to be good traders. Like the human mind in general is wired for survival. It's not wired for performance. And that's something that we have to stop and change if you want to find consistency. Going back to one of the questions that we talked about earlier, we talked about this difference between luck and skill. It's easy to do everything right or wrong and make money one time. But as we've said, the markets are a game of probability. Anything can happen at any time. And what really bridges the gap between luck and skill for me is repeatability, right? How often can you do that and still make money? Like you'll find the traders that will make money by doing all the wrong things, moving their stop loss, doubling up on a loser, all of these little things. But how often can you do that before you eventually blow up?
Yep.
That's what really bridges the gap. In my field, I speak to a lot of traders about emotions. We speak about greed, fear, the need to take revenge, FOMO, all of these sorts of things. But one of the ones that's very, very prominent for me is the presence of fear in trading. Is this something that you've had experience with? And if so, how have you got to a place where you stop fear hijacking your decision making?
There's a few methods that I use to combat fear. The first method is visualization. You don't really feel this discipline or this urge to do the hard things because you just want to do that thing. And it's the exact same thing with fear. If you love something so much, the fear will not face you. Like you will just do what's necessary because it's in alignment with who you are or who you are trying to be. And the third thing is habituation or acclimatization. The thing about fear is that fear only exists before the event. Fear exists before we jump into the cold plunge. Fear exists before we take a trade. But once you're in the position, you're forced to be in the present moment. Because fear does not exist in the present moment. It exists in the future, right? You are thinking about what could potentially go wrong. So by ensuring that you are in the present moment, this reduces the power that fear has over you. And the only way you can get rid of that, or rather the only way you can be in the present moment, is by doing the damn thing that you're scared of in the first place. I always use this analogy. Back when I was in the military, I was scared of going to like a mission, right? Because there's a lot of things that could possibly go wrong, right? Maybe my rations will get stolen by the enemies. Maybe my comrades will get injured. Maybe a snake will be in the jungle that bite my ass when I am in a prone position, right? There's a lot of things that could potentially go wrong. But I realized that once I start putting the helmet on, once I start loading my machine gun and I put my gear on and I start walking, fear dissipates. Because now you're focused on the mission. You're focused on what you're going to do right now. You're focused on the next step that you're going to take. So fear only exists in the future. It doesn't exist in the present moment. And back to the topic of habituation. Like I said earlier, you get habituated to the things that you're scared of, right? So if you're scared of cold exposure, you do it the first time around, it's going to be cold as shit. You're going to freeze your balls off. But if you do it every single day, eventually you're going to get acclimatized to the cold and you don't feel the fear to do the thing anymore because you're so used to it.
I love that take on fear. There was a video that I watched many, many years ago. You might have seen it. It's very popular, by Will Smith, where he talks about his experience jumping out of a plane. You ever watch this? So he talks about his first experience skydiving. And he basically says that the night before he was out with a few friends and they were drinking and they all came up with this idea of skydiving and everyone thought it was a good idea after a few drinks. And the next day came around and they started getting ready. And he goes, the moment the door opened up, he shit himself, right?
And he goes, his face.
yeah, that was the moment he goes, I really felt fear. And then he describes it and he basically says they count you down from like 3 to 1, but they often make you jump on 2. Because he goes, usually when people get to 1, they instinctively hold on to the side because of the fear. So they force you to do that hard thing. And what he described from that was, I think the way he poetically put it was like the most beautiful things in life are on the other side of fear.
Loved it.
And the problem is, I mean, let's take this back to the context of trading. When most people feel fear, they don't try and move through it. They try and move away from it. Right? They're not willing to take those extra steps to actually sit with the feeling and actually figure out what's on the other side. And I think a lot of people, even to begin with, again, sticking with the context of trading, they don't even really know what they're fearful of, right? I speak to a lot of traders, and when I try and unpack the psychology behind what they're experiencing, they talk about a position that they're feeling fearful of. And they don't understand that often you can be scared of one of two things. You can be fearful of losing money, or you could be fearful of being wrong. Now, most people automatically attach this idea to, I'm afraid to lose money. But for a lot of people, even reducing your position size, if you're not scared of losing money, changing your position size is going to make no difference. And so this is why I always think as a trader, if you really want to make progress, you have to start by looking underneath the bonnet. You have to know what is causing the fear. And until you know that, you don't really know how to fix the problem because you're kind of just like trying to stab things in the dark. You're trying to figure it out. But it's an interesting take on it. And I really like the idea of always trying to move through fear rather than against it. And we had that this week, right? With the cold exposure.
2 days ago.
It's like, for anyone that hasn't done it, it's got to be something that you try it at least once, right? I think you summed it up well. You called it the contrast. Was it contrast therapy?
Contrast therapy.
Talk to me about it.
Contrast therapy is, by the way, before I talk about contrast therapy, I have something to add to that. And I call this the sleeping rule. A lot of traders ask me, I can't sleep because I have a position open. And I always tell them about the sleeping rule. The sleeping rule states that if you can't go to sleep with a trade open, the position size that you use for that trade is way too large. So you need to size down. You need to ensure that you're risking so little on the trade that it does not hurt if you lose that trade. And for some people, it could be 1%. For some people, it could be 0.5%. So if you want to have a peaceful night of sleep, like a restful sleep, use a lot size that is so small that it will not hurt you. Or just don't hold the trade overnight at all. Right. Okay, going back to the contrast therapy. I believe that it is essential for a trader to optimize their body, their mind, their spirit, and basically their relationships as well. And contrast therapy is one of those things which hit a lot of those areas. It hit the physical, it hit the mental, and it hit the spiritual. And I'll tell you why. In a contrast therapy, you are alternating between hot and cold exposure, right? So you spend 5 minutes in the sauna, and then you spend 1 minute in the cold plunge, and then you do that 3 times in a row. And the first time you jump into the cold plunge, it's extremely difficult. You feel the fear. But once you're in the cold plunge, if you don't move, like what you mentioned, you get acclimatized to the cold. And then the next round, you go back to the sauna, and then you go back to the cold plunge again. It feels less cold than the first time round. So fear is just your mind playing tricks on you. Like what Jocko Willink say, other than death, all fears are merely psychological. And the benefits of contrast therapy is it speeds up recovery, and it ensures that you're just fully focused when you go onto the charts later on. And it gives you this surge of energy that not much supplements can give you, right? Because it literally forces your body to get used to uncomfortable situations, be it both in the heat or in the cold.
I like that. And again, experienced it firsthand this week. Me, you, Jason, all did it, and we all came out feeling amazing. It's probably like the most energized we felt like all week. And I think this week has, I mean, we've done a few of these trips. This one in particular has all been really centered around the idea of like just doing hard shit. Doing shit that you don't want to do, that maybe you don't even think you're capable of doing, but just trying. Just going beyond those limits. And that's something that I've always seen you do for a long time. And I think one of the hard parts about pushing yourself past that limit is you're kind of in that space. And I you know, I'll take this back to the last kilometer of our 5K run the other day. And I think I said to you at one point, I was like, this is where you find out who the fuck you are.
Yeah.
Like, it's not the first kilometer. Anyone could do the first one. It's that last stretch where like your mind's given up, your body's given up. This is for us that don't run, right? Your mind and body is given up, but that's where you find out who you are. How have you got to a point where you can remain so brutally honest with yourself, both in life, but especially in trading?
In trading, I have something called the Book of Secrets. The Book of Secrets is basically a compilation of all the trades that I've taken throughout my entire trading career. So it's pretty much like my entire trading journal of 20, 21, 22, 23, 24, 25, all summed up together. And that forms the Book of Secrets. The Book of Secrets is called the Book of Secrets because of the fact that inside this book, it contains all the secrets that I need to be able to perform at a high level. Because it explains all the things that I'm weak at, all the things that I'm good at, time zones that tends to work when I'm trading, what is my trading style. All of this information, my own unique edge, I gathered it through analyzing the Book of Secrets relentlessly. So I highly recommend everybody to have such a book, right, where you store all your trading data and you just be brutally honest when you review yourself, right? Like, so if you lost this trade because you were revenge trading, if you did not let the trade play out because you didn't trust your plan, these are lessons that you can tap on in times of need. So that's the Book of Secrets. In terms of in life, I'm a guy who doesn't like to get complacent. I always believe that you should be striving to be better today than you were yesterday, to be a little bit wiser, a little bit fitter. And the only way you can do that is by constantly going outside of your comfort zone. Goggins has this concept where he kept success, which means that when he gets to the top of the mountain, he purposely pushes himself down so that he doesn't enjoy the view and he keeps climbing the mountain. And that's something that I've applied to my life because I realized that when I hit a huge milestone where I made 200K a month, 100K a month, 50K a month, something that I've never accomplished before, I tend to start slowing down, taking my foot off the pedal and get complacent and think about enjoying life. But the thing is, what I enjoyed the most is not the view, but the climb. So I have to consciously always ensure that I limit my success and limit my complacency by doing hard things every single day, by doing things that I fucking hate doing.
Yeah.
Yeah.
I like the fact that you brought up Goggins, because when you talk about like overcoming pain, pushing your mind and your body to all new levels, like he's your guy for it. He has this great principle I'm going from memory here, in his book, Can't Hurt Me, where I think he calls it like the accountability mirror, where you take the post-it notes and you write down like your deepest insecurities and things like that, and you put them on the mirror for you to look at every single day. And it kind of reminds me of what you were talking about there in terms of being like, you call it the Book of Secrets. It's the same principle. He's doing it obviously in a slightly adapted way. But it just forces you to be present with exactly who the fuck you are, where you are today, where you want to be, and how you get from point A to point B. So yeah, really like that, man.
Yeah, speaking of Goggins, I don't know whether I told you this, but I listened to Goggins when I was 16 years old. And since then, every single week, I consume one of his podcasts or one of his videos. Like now, I'm just thinking like him and acting like him and behaving like him. Obviously not at the extreme level, but I've gotten to that point where I literally remember every single story that he has told so far, be it the accountability mirror, the cookie jar, the Rocky story, every single thing. To me, he's like that one guy where people feel like he's extreme, but I feel like he's extremely inspirational. And like, I'm about to tell you about the military story. I got his tattoo, the same exact tattoo on my back right now.
Nice.
Big fan of him, man.
What's one lesson that you wish every trader would take to heart, regardless of what level they're at?
Do not get distracted by the women in the red dress.
I like that.
A lot of traders, they start switching their strategy, their trading style when they don't see results, when they don't see sustainable results. And what they don't realize is that you are pretty much resetting your competence level back to baseline. For example, if today I'm a beginner trader and I start getting into trading and I win a few trades and I lose a few trades by trying this one strategy, which let's say is price action. And if you get to month one and you don't see results, what 99% of traders do is that they switch to the next vehicle, whether that's AI automation stuff right now or affiliate marketing or drop shipping. And they don't give themselves enough time to prove to themselves that they can actually master this craft. And they don't give their strategy enough time to prove that it actually works. So that's one. Another one would probably be for more intermediate and for more experienced traders. When they start realizing that their strategy is no longer working, they start automatically thinking about how to change to the next shiny strategy, the next shiny object, whether that's switching from price action to smart money concepts. When in reality, you just haven't gathered a large sample size of trades to prove that your edge is not working. And you automatically assume that your strategy doesn't work after 5 trades. Or it could be because of the mental part as well, right? It could be because it's not your strategy that does not work. It's because you don't know how to handle your emotions when you're in the trade. So there's like a lot of variables when it comes to it. But you want to make sure that you don't skip from one strategy to another strategy without giving it enough time and data.
Yeah.
And this same thing applies for trading style as well, right? Switching from scalping to intraday trading to swing trading. And it also applies for the assets that you're trading, switching from Forex to crypto, back to stocks. When in reality, all of these assets, they move differently. The same technical analysis concepts might apply on all the asset classes, but the fundamentals, the sentiment that move each asset is differently. So once again, when you switch from one asset to another asset, one trading style to another trading style, one strategy to another strategy, you are going back to zero.
Yeah. This all felt very personal because this was the loop that I was stuck in for genuinely like 6 years. The first 6 years of my journey was horrendous, and I did exactly this. I was constantly distracted by another strategy. And the underlying problem was I didn't have enough data to give me the right expectations of how my strategy would perform. And so every loss felt personal. Every period of drawdown made me think that it was me that was the issue, and then you go out looking to try and fix it. And I mean, I spent such a long time living in this cycle, and it's the worst thing you could ever do. Psychologically, strategically, in use of your time, it was terrible all around. And this is why I say to most traders, and something that we've talked a lot about today, is just like having that foundation of data. You don't know what you don't know. And so now I'm in a place where my strategy obviously is very different to yours. I trade slow. I trade on basically a daily time frame. But my data tells me that a normal period of drawdown is anywhere from 1 to 3 months. And so if I'm in drawdown for like 3 months, it sucks, but I don't question it because I've seen my data and I know that it's normal. It's happened before. It can happen again, but I know that if I'm just consistent and I stick with it, it will go through a period again where it starts to thrive. And that for me has always been my truth. And it's not the best strategy. I'm not saying it's the most optimized version that everyone needs to take on board. But for me, it's a great example of just knowing your data. I know how my strategy works over time. And I know that there are periods where I have to thrive and there are periods where I just have to survive.
Exactly. That's how you trade like a casino.
Yeah.
A casino does not abandon their risk management rules when a player is going through like a winning streak, a losing streak, or a new player comes in, or whatever time of the day. They don't start to think that, oh, our system sucks when a player got lucky. They know their numbers. They know their math because they got the data and they trust that you play out and they let their odds play out in the long run.
100%. All right. I want to give you a lightning round, and I want to ask you for a piece of advice based on 3 different people. Okay? The first one, what piece of advice would you give to a new trader that was starting with $500?
Don't bother to try to flip the $500 into fucking $10,000. I've been there. I've done it as well, right? I flipped $500 into $9,000 in 3 days in my first year of trading, and I blew it all. Instead, treat it as market duration. Use it to buy experience in live market conditions. Use it to experience what it's like to handle your emotions in real time, to manage risks, to follow your trade plan.
Nice. I like that. Second one, what advice would you give to a trader that's been in the game for 3 years but still hasn't developed consistency?
You're probably doing the wrong thing. Like if you've been in the game for 3 years, and you have not figured out your edge yet, you're either doing the wrong thing or you just have the wrong mindset. Like, it's either one. And the first thing is to go and review, why are you losing in the first place? Why are you repeating the same mistakes over and over again? And by becoming conscious of these mistakes, you are able to develop solutions, strategies to combat these mistakes so you can make less mistakes and make more money. So go and figure out why you are losing, because insanity is doing the same thing over and over again and expecting different results.
Nice. I like that. And the last one, what advice would you give to an already profitable trader, but one that's struggling to scale their capital?
There is a significant difference between trying to walk on a tightrope that is suspended 1 feet above the ground and trying to walk across a tightrope that is suspended 100 feet above ground. And how Philip Pettit, the person who actually walked across the World Trade Center, described it is that he has to get acclimatized to walking on the tightrope, and he start off by walking the tightrope when it's suspended a few feet above the ground. And then he slowly worked his way up to walking on the tightrope that is suspended between the World Trade Center. So he slowly built it up. It's the same thing with trying to scale. You want to make sure that you are sizing up consistently and at a pace where it's sustainable. Because there's a big difference between trying to trade one lot and trying to trade 100 lots. Psychologically wise and also technically wise. And you want to slowly get exposed to that progressive overload of increasing the lot size. So today you might try to trade one lot, right? And tomorrow you might try to trade two lot. But you don't just straight away jump to trading 50 lots or like 100 lots. You slowly work your way up and you slowly build your capital. Because you shouldn't be thinking about how to flip this $1,000 account to $100,000. You should be thinking about how to get access to more capital. And the only way you can get access to more capital is by having like a proper edge first. And the only time you should get access to more capital is when you are comfortable with trading the lot size that is suitable, that is aligned to the 1% of your account. So you want to slowly work your way up. You want to think about how you can manage 100K, and then think about how you can manage 500K, and then how you can manage $1 million. Because risking 3 figures on a trade is very different from risking 4 figures or 5 figures on a trade. Psychologically, if you're not ready for it, you are just going to be wasting your time and you're going to be wasting your capital as well. So slowly work your way up using the concept of progressive overload.
I completely agree with that idea. I always described it basically to the exact same answer, but in a little bit of a different way. So I always say, if your goal was to bench press 100 kg and it was your first day in the gym, you know you're not going to do 100 kg on your first day, right? And even if you started with 10 or 20 or 30 kg, whatever your starting point is, and you did that for 6 months and you built yourself up to 50, you're not going to think, I've gone from 0 to 50. I'm not going to jump to 100 now, right? Most people know that your body is not ready. And the only way to go from 50 to 100 is like what you said, it's progressive overload, right? It's slowly increasing the weight and giving yourself the time, keep showing up every day and just letting the body adapt to the new level of weight. Your mind is the exact same psychologically, right? If you want to increase the size of capital that you're trading and you want to be able to cope with that psychologically, you have to do it slowly. And I think the problem is most traders now, they go from 0 to 100. And prop firms are a blessing and a curse that way, right? They give you that ability where for $500 or $1,000, you could be essentially managing simulated funds of $50,000 to $100,000, right? But in some cases, $200,000, $300,000. And a lot of people think that's a fantastic way to leverage their money. And it can be if you know what you're doing. But for a lot of people that are untrained or not ready, it's the worst thing you could do. Just exposes that kind of gambler's mentality and it keeps you trapped in this cycle of continually blowing accounts.
I think the reason why this is happening is because of comparison. Nowadays, if you go to Instagram, you see this freaking 18-year-old with his Lamborghini, and he mentioned that he got it from trading, right? And you automatically try to compare your chapter 1 with someone else chapter 20, right? That 18-year-old, even though he's young, he might have been trading for 6 years and he might have a lot of trading experience in the markets. So of course he's going to get funded with 100K, 200K, 500K while you are just starting out, right? So ensure that you are using them as inspiration instead of constantly trying to compare yourself to people who have achieved what you want to achieve, because they might have more skin in the game than you do.
There's one of my favorite quotes. There's a picture of, you know, Michael Phelps, the swimmer?
Yep.
There's a picture of him. He was doing a race at the Olympics, and it's like captioned basically, he's looking forward, and the person just behind him is focused on him.
Yeah.
And the caption, winners focus on winners, losers focus on winners. Yeah.
Winners.
Yeah, it's such a good quote, but it's so fitting for exactly what we do as well, right?
It is.
All right. I want to hear your raw and honest thoughts on these tweets.
Stop trying to be a hero. Start trying to be consistent. What it means is that a lot of traders, when they start out, they want to flip their small accounts into large accounts. They want to skip the process of doing the hard work because they're used to instant gratification. It could be food delivery, it could be porn, it could be whatever that we have in the modern times right now. They're so used to getting things done fast and done it in their way. So as a result, they have this unrealistic expectation on how trading should be, or the timeline it takes to succeed at trading. I always say that you're not unreasonable in terms of the goals that you set. You're unreasonable in terms of the timeline that you set to accomplish those goals. Like if you think about it, if a beginner trader wants to become a millionaire in 6 months, that's pretty unattainable. But if you want to become a millionaire trader in freaking 50 years, then that's probably a lot more achievable. So it's all about the time horizon that you set for yourself to accomplish those goals. And you want to ensure that it's realistic. So you want to be pessimistic when it comes to the timeline, and you want to be optimistic when it comes to your goals. Set big ass goals, but be pessimistic in terms of the timeline, or don't even have the timeline. Just continue to show up, try to focus on the process, put in the reps, do the work, be consistent in terms of executing your trade plan, journaling your trades, following your risk parameters, and eventually the money will come. Eventually you will see results. Eventually you will become a millionaire. It might take you 5 years, it might take you 60 years, but eventually you're going to get there. So stop trying to be a hero and start trying to be consistent. Focus on the process, trust the process, instead of focusing on the outcome, and the money will come as a byproduct.
There's a quote by, I believe it was Bill Gates, where he talks about the idea people overestimate what they can do in a year and underestimate what they can do in a decade.
Yeah.
It's exactly that.
Yeah. If you want to trade like a sniper, you have to first live like one. Back in the military, in order to become a sniper, you have to have extreme levels of patience. And you have to learn how to act alone and be independent. So to go through like the sniper training test, it requires you to be outside in the jungle in a prone position with a sniper, looking at the scope, trying to spot your enemies, holding your position for hours upon hours. And when they put on the ghillie suit, they have like this bag that is attached to their dick. They literally can't afford to go to the toilet. Like they have to pee through the bag, and they have to be in that position at still for hours upon hours. And I'm always thinking about how can I develop the patience of like a sniper. And what I found is that you want to make sure that you optimize your environment so that it's easy for you to be patient and you can wait for your trade setup without trying to rush or take impulse trades. And you optimize your environment by ensuring that you are trading at a very specific time, whether that's the London Q zone, the New York session, whatever it is. During those time, you go into the charts and you look for your setups. That's one. And another one would probably be to ensure that you have like a fixed set of criteria that you look out for before you enter for the trade. And you don't enter if the trade does not check off every single box within that criteria. The third thing is that once you are in the trade, you want to hold a position all the way to your TP without trying to close the trade early, take small wins, because you might just encounter like a losing streak, and now you're trying to crystallize this win in order to offset the loss that you incurred in the previous trade. So to trade like a sniper, wait for the A+ setup. Once you got your A+ setup, hold the trade all the way to your TP, just like how you would hold your position as a sniper, and let the trade do its thing, right? That's what it means to develop the highest levels of patience and trade like a sniper. Profits are not given. They are rented from the market. And the rent is due every day in the form of discipline. It is one thing to make a profit one time, But it is another thing to make consistent profits month after month, quarter after quarter, year after year. And if you think about how you can increase the likelihood of that actually happening, the only solution, the only way to do that is to ensure that you are consistent in terms of executing your systems and following the processes that a professional do on a daily basis, every single day, day in, day out, because consistent actions leads to consistent profits. And in order for you to be consistent in terms of the actions, you need to ensure that you build a sense of discipline to force yourself to execute your trade plan even though you don't feel like it, to force yourself to journal your trades after a losing streak, especially when you don't feel like it, and to force yourself to hold the trade all the way to TP, let your winners run high and cut your losses early. All of this stuff requires discipline. But if you're able to overcome the initial bump of resistance, eventually you'll find out that these things becomes habits and you don't feel that the need to use discipline to do these things. And eventually you'll be so consistent in terms of your actions that you'll be unbelievable you do not succeed in the long run.
I like that.